Hey traders, Jason here from Leavitt Brothers. There's an ongoing debate about the current market. I mean, there pretty much is always a debate. Is it top forming, or has what's taken place over the last 18 months, give or take a few months, just a big consolidation pattern within an uptrend? In my eyes, entering such a debate is kind of silly at best and dangerous at worst. Silly because it doesn't matter. Unless you're managing billions of dollars and need time to exit positions, there's no need to predict the future. Most on Wall Street would be wise to turn their brains off and just go with the flow. Dangerous because it causes you to dig in and defend a position instead of being open-minded. Nevertheless, as an intellectual curiosity, let's review the last three tops or potential tops and compare them to the current market structure. All right, so here is 2000, this is 99, 2000, 2001. You can see the market kind of rolled up and down, up, down, up, down, up, down to a top, and then it kind of moved sideways, and then it just kind of rolled down. Okay, it has kind of a rounded feel to it. Okay, nothing hugely hysterical on the way up, nothing hugely hysterical on the way down. The market just kind of traded up and then traded down. And of course, you know that the market eventually fell about 50%. Okay, there was a bounce here that went up to the 200-day moving average, and it got rejected, and it went down, and the market got crushed. Okay, so a very I want to say gentle pattern, but the market just the market traded up and then it traded down. There was nothing out of the ordinary that took place. Okay, people or traders over here obviously weren't thinking that the market was about to get cut in half, because the character of the moves would not suggest that the traders were very worried. Okay, very much a rounded top pattern. Now this is 2007, 2008. It has a similar structure. Okay, similar rounded top. Okay, higher highs, higher lows, eventually lower high, lower lows. And like the dot-com bubble era, traders don't seem very worried. Okay, there was a bounce here that went up to the 200. It pulled back. It went back to the 200 and eventually fell apart. And again, like the dot-com era, did traders right here think the market was about to get cut in half? Because that's pretty much what happened. Okay, again, the market slowly traded up and slowly and gently traded down. Traders didn't seem too worried. And of course the market got cut in half. It fell 50%. So this rounded top seems to be a characteristic of a topping pattern. Now let's go to 2014, 2015, 2016. Not as rounded. Okay, you could try and throw a curve in here that looks kind of rounded, but what I see that's more characteristic is I see a huge move down here and then a huge move up, huge move down, and then there was a big move up. Okay, so let's fast forward and show the rest of this chart. Obviously it did this. Okay, so instead of being a rounded top, this has much more of a rectangle top type of feel, and of course this being over at 2,000, the market actually broke out to a new high, and now we're close to 3,000, so the market rallied 50% from this level. Okay, so very much a big difference between this top and the dot-com and financial crisis era. Okay, you have these really stiff moves down here which weren't present at the dot-com during the dot-com and financial crisis, and then you have these big rallies which take out the 200-day moving average. Now let's compare this to today's chart. Here's today's chart. Okay, you could argue that there's somewhat of a rounded top here. Okay, and I'll kind of buy into that. Okay, but like 2015, 2016, you have a stiff move down. You have a stiff move down. You have a stiff move down. These stiff moves down didn't exist in the previous two, in the prior two tops. Okay, now let's fast forward the chart to today, and obviously there's been a big recovery, and this top actually looks much more like 2015, 2016. It looks much more like a rectangle. Other than right at the end of December, beginning of January, it looks much more like an 18-month rectangle as opposed to a rounded top. Okay, so if I were to sum all this up, 2001, 2000, 2001, you have a rounded top. Prices gently moved up, gently moved down. 2007, 2008, prices moved up, prices moved down, definitely a rounded top. But in 2015, 16, you have a rectangle top, which resolved up. And right now we have what looks much more like a rectangle top, which I'm guessing, okay, you can call this analysis kind of amateurish, but I'm thinking because this top here, okay, in the current, whoops, that's not what I want. Because the current market structure more closely resembles 2015 and 16, I'm thinking it acts the same way too. I think we break out here, S&P rallies well into the 3,000s, 3,200, 3,400. My target is somewhere around the 3,400 area, maybe even 3,500. I find it interesting that in these two cases, when the market was topping and about to fall 50%, price action was pretty orderly, and it didn't look like Wall Street was very worried, and yet the market got crushed. And then in these two times, and of course the jury's still out for today, but at least in 2015, 2016, traders were actually worried. There were these big plunges, boom, boom. You can even say this one here, boom. Okay, so traders were very worried, and it ended up being no big deal. The market just continued consolidating, and then it eventually moved up. So almost in all cases, okay, I'm not including the current case, traders were looking the wrong way. In the dot-com era and the financial crisis time, price action was very orderly. Nobody was worried, and the market got crushed. And it looked like people were worried. Traders were worried in 2015, 16, and so they were worried a lot, and it ended up being a false alarm. The market ended up resolving up. So I find that interesting that in all cases, traders were looking the wrong way. When they should have been worried, they weren't, and when they should not have been worried, they were. So I'm thinking like these big moves down here, that's actually an indication that traders are looking the wrong way. They got trapped selling their positions, looking the wrong way, maybe going short, and now they're actually regretting it. I'm guessing here we go up. I don't know what the path is, but I'm thinking we go up into the 3,000s. Okay, that's my analysis. Thanks for listening. If you liked the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. We provide market analysis, trading ideas to individual and institutional traders and investors. Again, thanks for listening, and I'll see you next time.